Good virtual Jackson Hole, everybody. Hi, Alexander, Hugo. So everyone waiting with bated breath. Everyone doing okay? Hi, Laura. So just a little heads up here, we could have a 3 drive to a top here in S&Ps with one more marginal high. As Nasdaq started to act a little weaker yesterday, doesn't do as well with higher rates, and they are higher again, approaching the first rally high here. So if we start, it looks like we can make a move to 148. That's going to be a real big battleground. And if I wasn't expecting someday a little risk off, I'd say we could just blow to new highs up towards 2%. Okay, so that would imply that the end still has a chance to break out. Look at this short term, hello arena. We've gone through this back over 1020. We should accelerate to new highs. This was a confirmed high here. Euro pulling back. Actually has a little bit of a potential negative candle here. Still think this rising wedge is valid. Now it's going to come in all the way down at 1685. I'd watch his 1730 level on the moving average. And if you're long, be careful under here, back under these lows, because we could break to 1688, which is, almost only about 20 below this. EURJPY held where it had to at 40, which makes the euro the preferred long, which is being expressed in spades today with euro down 4 and cable down 30. Perhaps cable pulls back to this level, 36.70, maybe a 50 pip break to buy into it. And gold is trying to roll over. Silver's weaker than gold today. So we'll see. We do have Patrick with us, silver super cycle bull. So all you precious metal people that want to hear real bullish, extremely bullish forecast for silver and gold, stick around for Patrick today. He has some very interesting charts. Uses things like arcs and circles, and has a very bullish case for silver. And oil's trying to pull back here. I would expect 65 might be an important support zone, since it was a pivot for a false breakdown. Maybe it becomes support down here. You have a little bit of a pop in the VIX. VIX has really been wild for us to have these moves where you break out and you give it back. You break out, you give it back. Is, a market topping with violence. So we'll see what happens. I mean, yesterday, although the market was higher, one of your most heavily, your largest market cap stock is Apple. So far, this looks like a failing rally in Apple. We had this breakout that was a false breakout, and the star was really Microsoft. And, if it makes a new high now, it will not confirm. So I think it's a big 2-3 days for the stock market. We'll see what happens here going into month's end. Any questions on any of the instruments you'd like to ask me? Watch the Russell. It's trying to break out. Hasn't done it. Hasn't done it since April. We haven't made a new high in Russell since April. It's trying. TLT. I think TLT looks negative. Martin. Like we're rolling over and maybe we could get some acceleration. This is your daily here. Back under 146. Should open the door for 138.5. Hope that helps. Help you, Martin? Okay. So I believe it's just Blake and I today.
Man, it's been the Dale and Blake team all week. What's happening?
Yeah. How are you, man?
I'm good. I'm a little tired. We had my son's first football match last night.
Yeah.
And of the season. And I was telling the guys and gals in the chat room, it is the first time that the kids are getting older. And so the games get later because they play the younger kids early and then the older kids kind of play later in the day. And then the games are like longer. So the halves are extended. And both happened last night. I was like, oh my God, it's late. By the time I got home, I was like, wow, I did not expect that. So yeah, they're becoming more and more like adults and treated as such. So it's interesting. So
look at Bitcoin did fail from up there.
Yeah, I forgot to show that to you yesterday. I'm sorry. We got caught up in talking about a few other things, and I forgot to mention that to show you kind of what we were looking at with the AB.
I think we did, where it looked like we could go to about 40,000 or so. Okay. Oh, the triangle. All right.
No.
ABCD.
Yeah. So I mean, it was just a completion move. I'm not, thoroughly convinced that it's going down yet. Here, I'll actually remove this just to kind of get it out of the way. I had it more on I don't know why I just deleted. Oh man, I just deleted my 50-day moving average. Hold on.
Sorry, I hate when I do that.
I know. Let me put that sucker back on because I don't do moving averages that often. So I just kind of leave them on there. So just oh gosh. Here we go. Indicators. Moving average. Oops. I just put in 2. Okay. Sorry. Let me adjust that.
So how are you doing today, Dale? This is how I am.
Was this an invitation? How you're doing?
No, I mean, what you're doing right here,
Oh, yeah. It's funny. I can a lot of, here we go. It's like, and I'm on top of it. I'm like really, really tired today, which isn't good. Bless you. Since this is the first day of Jackson Hole. The thing about Jackson Hole, and I want to point out something really quick when let me just adjust the colors here. There we go. I just kind of wanted to adjust everything back to where it was. And why did 50-day? Sorry. All right, here we go. Sorry, I'm back. All right, so there's your 50 and 200. And I keep that up. The reason why I keep the 50 200-day moving average up is I want to make sure I'm looking at, there's still like some of the moving averages that I really, really pay close attention to. And that would be like the 200-day moving average and the 50-day moving average. I'll put on a 55 EMA every once in a while there as well. But notice that the 200-day moving average is really, coming in as support here. And so that like, in Bitcoin, that's important because it's actually affected the market a little bit from time to time, and it tends to be more important for a lot of different instruments. But one of the things that I really wanted to talk about today, especially ahead of Jackson Hole, is this move higher that we've seen in yields across the curve too. And look at the 10-year, specifically as we're breaking higher out of, a consolidation. You can actually see it in the 10-year in the bond market here. And we dropped below the 38% retracement. And that has to be getting some people's attention. And what we're seeing it reflected in is like the yen. You see the dollar yen's breaking above the 110 level. And that's, that's pretty important. And I think what that's really suggesting to us, following Jackson Hole is telling us that, yields are going higher, but that means that the Jackson Hole, what the market's expecting out of Jackson Hole is probably, just keeping the market in line with a possible taper that we're going to see at, in 2021. So it's not going to, it's now going to be looking at, how much of a taper are we going to be expecting into the end of the year. And it's, I think that's what the Jackson Hole Symposium is going to be giving us. And I'm wondering if we're going to see any response out of the market, since we've seen, when I say out of the market, I should say out of the currency market, since we've seen such a big dollar pullback in the over the course of the last couple of days, and one of the things that I think one of the risks surrounding the dollar right now is the possible false breakout that we saw at the end of last week. We saw the dollar, breakout, and then at the end of the week we closed at the breakout point, but we've given that back since the beginning of the week. The dollar is going to be really interesting to see how we close this week. I can't imagine that we're going to close in breakout territory, but whether we close higher from where we're currently at or lower is to be seen. And one of the things that, if you're talking about bonds, and the bond market is obviously looking pretty weak right now, and there's the 10-year, and you can see it's breaking lower, and here's your 30-year, about ready to break below the 200-day and the 50-day moving averages, by the way. Yields are going higher, and this is one of the things that I think Stelios has mentioned for the last, oh God, I don't know how long he's been talking about this, pretty much all of 2021. He's like, stocks aren't going to go down until we start to see yields really rally. So if the market starts anticipating that the Fed is going to, if the Fed's going to taper and rates are going to indeed go higher, are we going to see a taper tantrum, if you will? Are we going to see higher rates across the curve too? You look at the 5-year, the 5 years, testing the highs from a couple of weeks back. Here's the 10-year, we're getting close. 30-year, across the curve, we're starting to see rates move higher. So if they do continue higher in anticipation of the Fed actually tightening, what happens to, well, the first question I have is what happens to stocks? Second question I have is what happens to, yield sensitive currencies like the dollar yen? The dollar yen, I want to bring to your attention because it's actually threatening a breakout here of this triangle too. So you can see that it is mirroring, if you will, the triangle pattern of the 10-year treasury, which you would expect because this is a very common relationship. When the 10-year starts to break out, you'll start to see the dollar yen respond. But what's more interesting is what are other yen pairs going to do, and that's where I'm a little hung up, and I'm not really too sure what's going to happen. But I want to share with you guys something really. I think it's been a big development for me over the course of the last couple of days, is the euro yen. And I want to talk a little bit about the euro yen because I've been on the short side of the euro yen for quite some time. And I think, was it last week or 2 weeks ago? I'm sorry. We were in this triangle formation, and the euro yen broke down through the triangle, and you can actually see it here. This will be a better view of it. Okay. And I'm going to draw the upper end of this trend line here. So just do that. Okay. You can see this triangle. We were right up against channel resistance. I shorted the euro yen at, I want to say it was 129.45 or 50, somewhere around here before it actually broke. It broke lower, played it in the channel lower. I didn't make all this down here. I made a good chunk of it, but we saw it retrace back to the channel resistance this week. And I shorted it, or this last week, excuse me. I shorted it as we, hit the 618 retracement, the 129.10. I added a little bit to it. So my average was around 129. Anyway, yesterday it broke above that channel resistance, and I stopped myself out. I got out for like a 30 pip loss. I took a loss there, but that's not the point I'm trying to make. The point I'm trying to make is it broke this channel that we've been in for the last couple of months, and with yields going higher, I do agree with Stelios. Going back to our previous conversation, I agree with him that as yields go higher, stocks are going to start to take notice. They're going to start to come down, but I'm not sure how to react to the rest of the yen pairs, and that's kind of got me thinking. When usually I can pretty much put my finger on what I want to do, why I'm doing it. But in this case, I'm not really too sure how to react with these yen pairs. Like, am I going to be buying them because yields are breaking out, or if stocks start to come down, are they still going to move higher? Because we haven't seen that dynamic ever, it seems like. I want to also show you just something else with the euro yen, which I found really important as I was, deep diving in technicals, because let's go over to I'm going to pull up a different feed of the euro yen that I don't typically draw on. And this is one that I was actually making this point yesterday on the daily roundup. This is the euro yen, and this is a chart that I used earlier this year, and that's why you can see this verbiage here. I use this for a week ahead video, and that I put those up. When I do a week ahead video, I'll capture a longer term chart, and I'll put some words on it. And so I hadn't looked at this chart in a while, but I did that obviously when we were breaking out of this triangle at some point, earlier this year. Anyway, going back to this chart, what I found really interesting, this is a weekly chart, and that's a 13-year trend line, right? You can see it here. That's a 13-year trend line, and we're actually pivoting off of that trend line, basically, and it really is. We've found support at that trend line. So when I look at this, and this is a weekly chart of the euro yen, and then you see, okay, well, we got, the 50% retracement of the last leg higher has held. This longer term weekly chart has held. Then, you're seeing this big bounce off the euro yen, and automatically I'm thinking, okay, well, I definitely don't want to be shorted, and I was short. Remember, I was short this week. So I'm looking at this longer term chart thinking, okay, I don't want to be shorted, but how about if stocks do roll over, yields go up, stocks do go down? What am I going to do with the euro yen at this point? But the other important thing that I'm thinking with the euro yen is it's one of the currency pairs that really has a lot of liquidity behind it. So, if the euro yen continues to squeeze higher, it's going to start to prevent me from being too short the euro dollar. So anyway, there's a lot of moving parts with these cross rates, and the euro yen is one in particular that I've been looking at the last couple of days, really because I got, what really provoked me to look at it is getting stopped out of my short for a loss, and kind of, circling back and saying, okay, well, okay, I got out of that. Now, do I want to revisit that idea? Oh, no, I don't. And then, looking at the technicals, now you start thinking about what's happening with the cross rates and what's happening with yields and why it's moving. It does convolute the picture a little bit with the euro. And that's why, I'm looking at the euro dollar thinking, shoot, I don't even know what I want to do with the euro at this moment. Following the Jackson Hole Symposium. I know what I want to do with other currencies, but the euro is kind of it's becoming a little bit more of a question mark for me. So anyway, but I thought I'd bring up bring to your attention what's happening.
Would you consider that a risk on pair?
What do you mean?
Euro yen long going up?
Yeah, typically yes, and so that's, again, this is one of those things. The euro yen, you look at it, we broke that channel. It's had a bid basically since I got myself out yesterday. I got myself out like right on this big candle here, so like right here, at I think 129.32 or something. That's where I got out, and I'm looking at it thinking, okay, well, typically the euro yen is going to be stocks moving higher. You buy euro yen, you can buy Aussie yen, Canadian yen, whatever, all the yen pairs, right? But if yields really start to rally and stocks go down as a result, which I really believe that's going to be the case. I 100% agree with Stelios in his argument from like the last couple months. Yields go higher, stocks are going to go down. But what do yen pairs do? And that I don't know. It's going to be interesting to find out. It is going to be interesting to watch because
and I think that's the conflict with yields going higher when risk off begins might be the end of yields going higher. So I mean, if you really believe a correction's coming, it kind of could temper how high yields could go because, a risk off move is going to be yields probably pausing their advance, right?
True, but I want to say, the bond market's been in a bull market for pretty much my whole career. Yeah. One of my really good friends, I've mentioned him before on this.
Kevin Ferry.
No. Actually, I've been chatting with Kevin for another reason over the course of the last couple of days, because we're going to celebrate a friend's 50th birthday party in Napa at some point here in the next few months. Yeah, believe me, it's not something I want to do at this moment, but I've got like 1,050-year-old birthdays that I've got to celebrate.
It's like a bar mitzvah.
It really is. But anyway, there's a friend of mine who made his whole career on being a bond bull, right? The last 27, 28 years. He actually is Dr. Dre's personal money manager. And he invested into Beats before Dr. Dre sold it to Apple. So this is a friend of mine that I've known for 20 years. Anyway, he's a big bond guy at one of the top brokerage firms here in the US. And he's made his whole career on just being long bonds. And I'm looking at the bond market, and I know bond guys have been saying this for the last couple of years. But what happens when yields actually start to move higher and we start to actually see, I want to say yields normalize. I mean, it almost seems like yesterday, Dale, where you used to put your money in a savings account and actually get a return, right? Yeah. I mean, it seems like it's yesterday, but then you take a step back and it's been
10 years.
At least 10 years. Yeah. So what happens if the bond market actually, really enters, a bear market and we start to see yields move higher permanently, like moving forward? It's something that could really throw off the, and I understand what you're saying. Yields will be tempered if stocks start to come down because people will anticipate the Fed's going to, but what happens if, these inflationary pressures are real? They really are. And I think, we're starting to see the evidence that, like the price pressures that you're seeing here are not, I don't think they're going to reverse. We're going to see inflationary pressures build like they have, over the last 12 months. Then they're going to moderate. Not saying prices are going to come down. They're going to be sticky. Right.
Yeah. You ever hear retail prices go up on a rocket ship and come down on a parachute?
I'm sorry. What'd you say? I missed
that. Prices go up on a rocket ship and come down on a parachute.
Yeah. That's probably what we're going to see. Right.
Yeah. Yeah.
And I mean, you know, it's been some years since we've seen any really big inflationary pressures on, you know, day-to-day things. You could, you know, argue about healthcare and, you know, well, all, you know, education and, you know, other things. But, you know, when you're talking about the day-to-day goods, I think that these pressures are here to stay, and that, you know, may actually force the hand for the Fed and other central banks to actually normalize rates, you know, quite a bit. And, you know, as rates go up, obviously stocks will come down. And again, that leads me back to the question is, what do I do with all these yen pairs? Because I typically, you know, I would be a seller or a buyer of yen, seller of yen pairs in a risk-off environment. But I don't know if I'm going to do that this time around. I mean, I'll obviously I'll just trade what I see, but you know, what I see, like I look at the euro yen, what I see right now is a bullish breakout. And I, you know, I'm like, man, maybe I was right. Maybe I was just getting caught on the wrong side here, you know, being short, you know, getting out, taking a loss and saying, okay, well, maybe I just got squeezed out because, you know, that's what, you know, the whole market was playing it on the short side. But then, you know, taking a look at that longer term chart, that the weekly, you know, trend line, you can really see it here. I have it in green. Reason why I have it in green is because when it broke above it, you know, back here in April, May, I'm like, okay, as long as we're above that green line, I need to be bullish. And then, you know, over the course of the last couple of weeks, we were, you know, trading around it. And, you know, that dip below the 200-day moving average back above it, you know, it scares me being on the short side now in the euro yen. And I don't know, you know, again, it's starting to influence how I'm going to trade the euro currencies in general, not just the euro yen, but the rest of the euro currencies. So, you know, just some food for thought there for you guys. While, you know, and I probably confused a lot of you more than helped you today. But I'm giving you something to think about, right? It's not, you know, a lot of times you have to sit back and think, why are these assets moving that you're trading, and what's the underlying reason for their moves? And you know, those are the questions I've been asking like the last 24, 48 hours, really. So, and like I said, in a risk on or risk off environment, depending on what we see over the next couple of days, I will say that, you know, with the Fed chairman tomorrow, we got inflation data, PCE data tomorrow morning, which is going to be what I feel market moving data about an hour and a half before the Fed chairman speaks, which is obviously what everybody's kind of waiting for at this point during this virtual event. But how I approach what currencies I use as vehicles to trade tomorrow's, you know, events are actually shifting because of the conversations I've had with not only myself, you know, with other people for the last, you know, 24 hours regarding these yen pairs. The way my approach in the market's going to be a little bit altered based on, you know, some of the underlying assets that are moving. And you know, that shift is important, and we're going to continue to have those conversations, obviously, in the ForexAnalytix community. But for the rest of you guys, I just want to mention, please visit our webinar sponsors. Go visit Forest Park FX, because they are our main sponsor of this webinar. If you're in the US or in Europe, you know, you want to learn how to get ForexAnalytix for free, or how to get paid with cashback rebates, visit Forest Park FX. Tell them that we sent you. Open your accounts right through here. I'm actually, with my personal account, I'm now my personal account, I'm starting to get cashback rebates, which is awesome. Haven't had that in years. So email them right here, or you can chat with them on Skype. They're the ones that actually address these methods of communication. But between them, and then you can always contact Pepperstone Securities as well. So Dale, I'm gonna let you continue on with your interview today.
All right. You want to watch the was there some important news coming in?
You know what? We have, weekly unemployment claims. Let me just double check really quick. I'm, since unless it's inflationary data, which we'll get some tomorrow, or employment data or an interest rate decision, I'm really not too interested. But we have GDP happening right now. Let's take a look.
That's a big number.
Yeah. GDP might move the needle a little bit. Hold on. Let me, looks like the dollar yen came under some pressure here. So
It's been weak.
Without Stelios here to weekly jobless claims came in a little weak.
There's GDP.
GDP a little weak as well. So the dollar yen came through 110. The euro is pushing higher. You got the Kiwi pressing higher, the Aussies pressing higher a little bit. So the dollar's under a little bit of pressure following that news. But again, I think what people are going to be watching, that's a 1 minute chart. It looks way more exaggerated on a 15 when you're looking at a 1 minute chart. And especially when the market doesn't move at all overnight. So, and this has been one of the more quiet nights as everybody's waiting for tomorrow. So remember, tomorrow's Jackson Hole. I do expect the Fed chairman's just going to, lead us down the path of believing that a taper is going to happen this year. We're just now we're just looking at, what is the dollar amount, or what are the specific numbers that we might be looking at. But we should all be expecting a taper coming this year. I don't think anything's changed, COVID or no COVID. So anyway, all right, Dale, enjoy.
I think that COVID has led to more people needing things let out than being tapered.
What do you say that?
Because I put on 10 pounds during the pandemic, so I need to.
You're gonna go visit. You're gonna go visit.
I don't need my clothes tapered.
I get it.
Yeah. Thanks, buddy.
All right. Have a great one, and thanks. Right. Have a great interview. Thanks everybody, and I'll see you guys. I'll see you guys either in the chat rooms or on. We're also doing the morning edge where we'll do the bias chart here in about 45 minutes. So I'll see you guys there for those of you that are in the ForexAnalytix community. See you then.
Good hunting today, Blake.
Thanks, you too.
So the Blake and Dale segment are over now, and it's my pleasure to bring on Patrick Kareem. And Patrick, I'm going to ask you to unmute, share your screen, and welcome back to F.A.C.E, buddy.
Hey, hi Dale.
Hi Patrick, how are you?
I'm doing great, man.
All right.
So happy to be back on this world famous show you guys have there. It was so much fun listening to Blake there. Talk charts there. It's I should do this more often.
Yeah. So pop in anytime. You're always welcome. And all right. So $1 billion liability and gold adjusted for inflation. You know what I wanted to start off with, and maybe we could go to exactly what you're looking at. These look like point and figure charts here, Patrick. You guys have bad charts, man, you and Kevin. So that spike flash crash that we had a couple of Sundays ago, I know you guys use like arcs and circles, and I was wondering if, just a spike, even though it came back gold more than silver, did it affect your charts when it did that? Or it held right where it had to, even though it spiked? Okay, there it is. All right.
That's what mine.
Gold.
Yeah. So it all depends on your on the time frame, right? So let's say, I know right now, because whenever you start a downtrend, what you start looking at, the power of the arc, essentially, it's just a visual representation of a downtrend, like the arc going down. And then it's this like the cycle that happens all over and over, right? Then after that, the downtrend is less and less acute. It's starting to be a base. And then when you start hitting the right hemisphere a few times, eventually that's like the beginning of an uptrend. So you could use a moving average, would probably give you the same type of thing. But in an arc, it's like just the the mathematics of it, the symmetry, it measures really the energy in, the reverse symmetry move out.
So that wick actually, it never closed outside of the arc. That's what I was thinking. Well, you could adjust it any way you want, but based upon what you had, what were you thinking when it was cracking the arc? You were probably asleep, but when it was
Well,
happening.
On the smaller time frames, honestly, Dale, it's like the smaller time frame, like with any trading tools, it's less and less reliable, right?
Right.
The patterns they could get overwhelmed by the hard time frames, hidden resistance. So let's say, look, this is like the daily chart, and but if I would have went on to the, let's say, the monthly chart, I'm not even sure. Like, do I have a? We're not even starting to carve out a right hemisphere yet. So let's say I'm based on monthly closes.
We haven't, there's not enough time yet to get to that side of the arc.
Exactly.
Does that imply we can move sideways for a while longer into the arc?
Yeah, that's exactly what it means. You can move sideways, you can move down. So usually the angle, so we could haven't actually, like, you're exactly right, like another month there, it could go up and then retest a little higher. So, and sometimes there's not even arcs. You want to have 2 touches of the right hemisphere to have a valid arc. And one of the most, like, if I could zoom out, one of the most popular arcs there that if you would have spotted it early would have give you like a huge, it's this one here. I drew it really fast, but the left hemisphere, 1, 2, 3, I could probably tighten it a little bit. A lot of touches. So you know that left hemisphere, it's perfectly well drawn out. Then you use your classical TA, you put in a breakout line, 1 touch, 2, 3, a bounce. Like this candle, it was like go all in. The low risk, high reward is right here, Dale. Right here,
I
when the
remember
arc completes,
1350.
when the arc completes, it's over. Like the arc's destiny has been fulfilled, and it's not time to try to enter here, because what happens after an arc, either a handle, or it does maybe a flag pull. You don't know anymore what's happening at this stage, right? You're above all-time highs. You don't know where people are going to want to sell, right? The people who bought in here, they're going to want to take profits, creating overhead resistance that you couldn't imagine was there. So the low risk entry is here, and now this is all this churn, and actually that looks like a descending bullish expanding wedge also forming right here, which we kind of had here back in 2008. I've been looking at this a lot of times because a lot of people right now, they're wondering, is this a top? Is this what we had back in 2013, like 2011, 2013? That's like the biggest question. And right now, the price construct, I'm looking at different ways. It kind of looks like this bullish continuation pattern, right? Even if the price action goes down severely, it's still a bullish pattern as soon as it breaks out above its, look at a beautiful breakout, retest, and then shot away. And pretty much that's how I see gold right now. Gold has to survive. It has to go close above this line right here. And once it closes above and retests it
where's that come in? 1875, around 1880.
Let's put in this is where we're going to judge. I think this is how we're going to judge the gold bull market there. If it could really climb above this break line, and if it can close above this one, it's a good sign. But ultimately, you're not out of the woods until you close above 1875. Because look at what happened on the stop here. It tried. So I think we're kind of in this rally here. We're going to try to go, but this echo bubble high is not enough. So even if we close above 1900, you still need to overtake these monthly defined highs there. So hold your breath, guys. I'd say if people are on the sidelines for gold, you have to wait it out. You have to wait. Just
so
like
would
here,
you buy pull back to 1750 right now? It looks like that's where the arc might come in after the candle
Yeah.
you have there on your monthly. Maybe you could go shorter term to see if 1750.40 means something. That's what I was thinking, is that, I didn't buy the washout. I thought it was like, sometimes the market gets hit like that. It's like being in a car wreck and it's in shock and it has to, kind of fill out, reset that huge candle. And gold rallied back and got it all back. Any feeling on the fact that the gold silver ratio has been rising again? I mean, only 23% from the high at 110, but we've had a nice little pop in the gold silver ratio. And I know that eventually you're looking for outperformance from silver over gold. I'm wondering if this is a good spot to think about it, or there could be more left on in it. So what are you thinking? I see the chart there.
Well, I'm always going to overlay it with the DXY. Often
Okay.
they both go up at the same time. And
I didn't know that.
Yeah, and even look, I could even add the VIX. So in risk on environments, these three, the VIX, it's like the three horsemen. Well, I think it's supposed to be the four horsemen, but if the VIX, the DXY, and the gold silver ratio go up, it's super, super scary. We might be close to a US equity crash, something really scary.
Yeah.
We had it here back in 2008 when they all crescendoed together. We had it in March. I'd probably have to zoom in on the daily chart to see March. But if this is subdued, so if the gold silver ratio starts turning back down, we get a wick. If the DXY, look at that, the DXY for me, it's just doing a back test of a critical breakdown line, right? 1, 2, 3, back test. If this, even if it comes and touches here, gold silver ratio comes up even a little bit more here. I think even there's a back test. It could even spike all the way up here, and the VIX can spike up. But if that gets sold into and we start turning back down, that's going to be rocket fuel for precious metals and even equities. They're gonna enjoy that. But on the turn, off the bottoms, precious metals, they're gonna outperform the U.S. equities. They're pricing in all this monetary imbalances or whatever was done there to subdue that VIX. But right now, it's still a slippery slope.
Okay. Patrick, I know that you're really known because you kind of broke out with your super cycle work in silver. But I also know that I've read you have some type of trading system that you're also implementing for your subscribers. Does that include other instruments, asset classes like stock indexes? Are you doing that kind of work now?
Yeah, it could be any instrument.
Anything that moves, huh?
Anything that moves. So it's like based on the Stan Weinstein's stage analysis. So I don't know if you have, were you checking a ticker in particular? We could.
Well, like, the S&Ps.
Okay.
What your look is like on Nasdaq or S&Ps with us at new record highs. Do you have a look on those?
Yeah, let's do let's look at Apple.
Oh, okay, good. Yeah, I'm following it.
So right now,
it's like a 3 drive to me up here. See the last 3 highs? That's a 3 drive to a top formation, possibly. See that?
These ones?
Yeah, 1, 2, and now the last one is 3.
Okay. Yeah, that one looks like I even see oh boy. Yeah.
Looks bullish, huh?
Yeah, especially if it breaks to the upside, it should be violent. So when these patterns, if they're not contained, like even like those bearish falling, rising wedges, which usually should break to the downside, when they break upside, it's you usually have some crazy action that goes up and
throwovers. Throwovers above wedges.
It goes. So let's say here, I want to know if I want to go. Here at the bottom is the Mansfield Welter Strength Indicator. So as soon as you're outperforming, so let's say Apple's outperforming the SPX, that's a very good sign. You want to be always in an instrument which is outperforming its peers. If you're
Well, do
above
you
an incline,
consider that it is? Because it was late to the party while everything else was rallying. And there are a lot of things making new highs, S&Ps themselves, and well, on your weekly chart, yeah, we're making new highs. Anyway, I thought this might be a terminal, three drive to a top formation, diverging on the last couple highs. It looks bullish to you though. What would back under 140 change your mind on Apple?
I think so. Check it. So here it seems to be carving in a pull flag.
Yeah.
So if that breaks to the upside,
Yeah.
should have a pretty violent move. Yeah, if it goes back at 140, then this is in danger. You're closing below the 10-week moving average, and if ever it closes below the 30-week moving average, then you could be in trouble.
Okay.
What am I seeing here? Yeah, it's another rising.
Yeah.
Look at that rising, falling, right? Bearish rising wedge. So eventually, if that line breaks down, the target is the beginning of the pattern.
Right.
But if it breaks to the upside, yeah, you have the violent move up, and then once everybody's trapped, then you have a false breakout, and then as violently as it went up, it goes back down. So
okay, so we could still have that acceleration blow off here, melt up.
Yeah. Look, do you have relatives asking you to buy tech stocks yet?
No, I'm looking for top in Nasdaq up here. So that's why I'm looking at some of these. I think that because I think rates, they handle higher rates less well than almost anything out there. Banks love them, but big mega cap tech does not.
No, and man, it's such a slippery slope because I'm looking at those rates to increase, but it's everybody. I don't know. It's like
everyone's looking for that, aren't they?
So I'm wondering, are we contrarian now, wanting the rates to go up or thinking they're going to go up, or this could drag on for another year, 2 years, 3 years before they can't even go up?
Yeah. What tempers me is if we do get some type of correction, 10% or so in the stock market, I actually think it'll be 30. But if we get that, that's not going to equate to higher yields. Yields will come back down. So the Dow hasn't made a new high since last week. It's one of the few, but I know people looking for 35.9 or something like that before it puts in the top. But I mean, look at how long this advance has been going on, Patrick. Doesn't it feel like we're, you're taking us back to the early 1900s.
Oh yeah.
Okay.
Well, I just wanted to show that this is the parabolic melt up it had in 2028, 2029.
1929.
Right now, this 1, 2 blow off top, and then corrected down the channel. I'm just going to put a angle trend line.
Yeah.
And we could, what happened to my line? Okay, here. But the thing is, I always forget, and people forget, these are indexes, right? So the weaker stocks, they're rotated out, right?
They threw them out, especially in the Dow.
So it's kind of skewed. It's like a bullish bias. It's like it's a trading program in itself, right? Like the rotating type of trading systems where every month you take out the weakest sectors and you put in the stronger ones. Here you see, look, blow off top, hit the bottom of the rail. So this is a beautiful, beautiful channel that we've had for forever, right? And you can even here, look, I could probably draw one very close to here. So I'm expecting a blow off top through that upper channel here. So maybe this year, something that is really going to trap a lot of people, and then a pullback to at least retest this median line here.
Okay.
But nominally,
still blow off territory we're in, melt up territory. Maybe that's how it has to end.
Yeah, it could definitely go a little crazier there until this comes up above. The markets, they love doing that. Like, just exaggerate, seep through important resistance, an important line, But by the end of the year or the following year, it says, hey, something's wrong, and then it closes back below. People they want to take profits, etc. And then it could be just a cascade of events that bring it down until this bottom line here. But nominally, Dale, the numbers, it might go on forever. Like if you don't adjust this for inflation, in 10, 20, 30 years, we're going to be at 100,000 Dow, it's going to go. The numbers don't mean anything practically as you go forward, right? If you don't measure it in your purchasing power or in a, like, let's say you have to divide it by gold or divide it by silver to measure it into something more meaningful.
Okay. Is this a Bitcoin break we're getting today, the
Oh.
beginning of something, or just a little correction after a great move from 30,000?
Let's check. Yeah, I see it's correcting today a little bit. Yeah, so it's always tough once you've had a strong top where you were stretched away from that moving average, and then everybody's sold into. You have a base information, and when you try to regain these higher levels, there now you're running into overhead resistance.
Yeah, supply there.
Yeah, that's it exactly. So all that's supply. So you have to grind through that. The easy part was going through the fast fall. You could see here in the volume. So this is all the transactions for this price action, creating a nice base, but it went down so fast that there's like a vacuum here. Not many people bought on the way down. So as it goes back up, there's not many sellers here. So this was the easy part, getting up to here. And if you could get through this congestion area here, you have another vacuum all the way to 56,000 right here. I call these volume defined walls. So if you forget the price action and you just look, let's say I close that and I remove this, remove that. Your game plan could just be essentially playing these volume walls, right? As soon as you start sliding up above this one, then your next target is this area here. If you pass through that, then I call it's like a thin zone, a vacuum here. Then you zoom up all the way to 56,000. So you gotta keep a close eye. And right now, it's if you can't make it here, same thing on the way back down. Then there's a vacuum on the way back down. Not many people are willing to buy here, and it's gonna come and retest the top of that box right here. Hey, where's my box? Right here.
If you could make it here, you can make it anywhere. New York. How about also oil, Patrick, has been two-sided trading. Looked like we had a breakdown under 65. That little double bottom it took out. Now it's back above it. What do you do with a market like that? You see what I'm talking about? We had that little double bottom at 65, and then not going back that far, but now we're back above it. It looks bullish to you as well.
Well, oil. That's why if you have to always zoom out, because if you're too close, 1, 2, 3, this is the fourth touch of this breakout line. So this is kind of and now it's trapped in what I call a bullish transition zone. So 1, 2, 3, 4, and now on this breakout here, it retested it. Bullish trans above inclining 1 and 3. So what's just happening right here? It's just a consolidating.
Gains.
It's letting those moving averages catch up, I think, here, Dale. And if it doesn't, it could even go retest even that breakout line, and that would still be bullish, right? Above the inclining 3-year moving average, or starting to turn up. So it could stay here for a while, 2, 3, 4, 5 months. Just consolidate here, as long as it doesn't close too long below the 1 year or at all, because in the bull market, you want it to stay healthy like this. Or it could even like do this type of scenario here, come and retest that 3-year. Then you have a beautiful, beautiful launching pad to break out finally of this. Because this is the thing that traps everybody. It's every time there's a violent move. And even I found that trap. I think, oh, this is it. This is the move that's going to break out above these huge patterns. But what often happens more often than not, it needs time. It needs to go here. Right. Then after that, needs to do a higher low right here.
Yeah.
And then how it zigzags a little bit. And then when nobody wants it and it's coiled close to that breakout line, this is when the move happens.
So it has to move sideways to build up compression for the move.
it would be super healthy. Look, this
Yeah.
is like since 2008, man. So if ever we break out of this move, Dale, that's
Yeah.
some crazy inflation we're having. That's higher yields. These are all the higher yields, higher inflation crew there, which I'm angling that eventually this pattern is begging to have a breakout to the upside.
Yeah.
But we have to be patient there. This is
Do you track uranium? Last year, I started
oh,
talking to more and more people that were paying attention to uranium stocks. You know, it's part of the Green Deal, even though, you know, you could have the China syndrome. So uranium's looks pretty good. Just a little pullback here to support. All
exactly.
right. Okay.
These are the uranium ETF.
Oh, hold it. Let me get my Geiger counter.
I should put this green background. It's dangerous.
Yeah. What are DJ? What are CCY pairs? What are those? Are you talking about the yuan? Oh, currency pairs. Okay.
Yeah, look at currencies all the time there, like especially the odd USD that's critical for the inflation or bull market cycle for
it's China too, right?
true.
Aussie, yeah. Copper, everything.
Well,
So yeah, we've had a nice little pullback. Do you think it's over? I know some guys looking for about 66 long term. That probably would equate to what you have on the left side of the low. Maybe for a right shoulder or something like
right
that.
here,
66.
Well,
Yeah, and then look to the left, and it looks like it was about 67. Yeah,
because this could still be bullish, right? Building a flag, as long as it's above this critical breakout line. There's like day traders are going to be scared out of their mind. Well, what do you mean? I'm going down to 66. But as a position trader, as long as you don't make a new lower low, this is perfectly bullish. And look, there's a 3-year moving average. We could have these type of wicks, you know, below that 3-year, but I wouldn't expect it to close. A wick down here, man, that would be an insane buying opportunity there.
Okay. All right. I like it. So what's the best way for people besides, on Twitter too, at Bad Charts 1, and your website, please. It's, best way for people to follow you. There you go.
Yeah, NorthstarBadCharts.com, guys, with Kevin Wadsworth there, Northstar Charts. And we cover pretty much everything, taking requests. Even here, I just did this nickel chart. That's why I'm looking at all these commodities, and either they have a little bit of time to do it like a type of blow off top, but after that, I feel like the pullback, what we've been seeing in the currencies, etc. There could be some type of some reset there, and as maybe inflation expectations they kind of get subdued a little bit. In reality, maybe sinks in more, and then we got
maybe that what we're getting that now, a little bit of a pause in the inflation scare now before it reasserts itself. Could that be happening?
I think so.
With like copper down, it rebounded recently, but Aussie down, that maybe we're in this this period of it pulling back. Yeah, copper came back pretty good. But it still may not be ready to blow.
No, exactly. Could be, look, copper, it's done legendary runs, and look at these halfway pullbacks. Like this could be sufficient, maybe one more month. And gold kind of led the way. I think when gold restarts going up, it's going to help. Gold broke out first in 2019. And after that, all the commodities had their turn. So as these commodities cool down and gold gets ready to go up, after gold breaks out to all-time highs, then I think they're going to finish their pullbacks, all these commodities.
Gold leads everything, in your opinion. All right.
All the time, every time.
All right. Okay. He who owns the most gold rules. So gold leads, I'm looking to maybe buy a pullback at 1740, 1750 in gold if that happens. Any thoughts on this virtual Jackson Hole meeting?
No,
Patrick?
No, all noise.
Yeah. All right. So, I usually put up a Johnny Lang song on Fed days. Title of the song is Lie to Me, Tell Me Everything's Okay. So appreciate you being here, Patrick, very much. And Guys, I think that Patrick and Kevin produced some of the most interesting looks and charts using arcs and circles and things that I never even considered using. And they're a definite follow. Do you have any kind of trial that listeners could take advantage of for a week or a month where they could check out your work?
Well,
Or no?
honestly, most of my big picture charts, the techniques we put there, they're all free on Twitter.
Okay.
On the website, it's more like we have signal links like for the trading system for stocks that we really track for maybe swing traders or faster term traders. We even have a gambler's pick section where it's stocks there that are hitting, let's say, the right hemisphere of the arc for the first time, and nobody wants them. Companies like that don't even have like mining permits, but we as we don't even care. We just look at the low risk, high reward. And all those are on the website there.
Are you doing altcoins in the same fashion?
Everything. Yeah.
You
so,
do everything. I don't know.
Kevin's covering, let's say.
How do you do everything?
Here, like he did IOTA, he does podcasts covering 20, 30 cryptos in one shot.
Polkadot. Yeah.
Yeah. All these. If there's an arc like this one here, I don't want to drag on too long, but these are the type of opportunities. Not here, guys. Arcs at the end. It's the end of it. That's the target's reached. You want to get in on these bounces here, right?
Yeah. Interesting. So bad charts, because they're not bad. They're good, bad charts. Bad chart ones. Patrick Kareem. Thank you, my trading warrior brother, for being with us today. If gold was a James Bond movie. Okay.
Yeah. I don't know. Sometimes.
Moonraker. Love it, man. All right. Thank you so much, Patrick, for dropping in. I'll get a hold of you on Twitter, and really appreciate your work and Kevin's work. I think you do a great job for the FinTwit community. Thanks again, bro.
Thank you, sir. Take care, guys.
All right. Patrick Kareem, follow his arc, follow his circles, and I'll see everyone for TGIF tomorrow. Good hunting with the virtual Jackson Hole in the Wall conference. And remember, don't just count your arcs or your circles or your trend lines or your crypto or your silver coins that you're stacking or your bars. Count your blessings, and we'll see everyone tomorrow. Adios. People are thanking you. They're saying nice analysis, Patrick.
Thanks, guys. Appreciate it.
Good job once again. You never fail to open people's eyes to new ways of looking at charts, Patrick. Thank you very much.
Thank you.
Adios.
Bye.